Hello and welcome to another edition of Stock Watch as we get into the trading week. More importantly, the earnings season has kicked off. It's that time of the year again, and we're looking at PepsiCo this time around as they raised their full year forecast after its latest quarterly report beat Wall Street expectations quite significantly. And this came despite the higher costs of of producing the product, and also the ongoing problems with the supply chain with cargo disruptions along the west coast of America, which is still going on. The shares rose by just over 1% in yesterday's trading, and executives say that supply chain disruptions and inflationary pressures on labor will cause a bit of a price hike in 2022 as they look forward to the future. However, they did, as I said, raise their full year forecast. So let's just take a look at the numbers then. Earnings per share came in at 179 adjusted versus 173, and revenue was up 20.19 billion versus 19.39 billion. So quite a significant number there. So like I said, looking ahead to 2022, executives say they expect more organic revenue growth, and the earnings per share to be in line for the first quarter of 2022. So we'll see how that goes. And obviously we can't talk about Pepsi without talking about Coca-Cola as well. They are having problems again with the supply chain, and instead of waiting for containers to drop off the shipments in the docks, they're actually reverting back to bulk carriers chartered to shift more than 60,000 tons of cargo. So, they're basically leaving the big containers to where they are because there's such a delay with labor and, shortages with what's coming out of China and Asia because of the pandemic. Now we've seen an upturn in deliveries, imports and exports. So this is what's causing the big delay in a lot of other products, not just Pepsi and Coca-Cola. So let's just take a look at Pepsi first of all today. So I just wanted to point out the great ascension we've seen. So we've seen since the first wave and the second big wave. Now we're moving upwards, but we have stalled a little bit in this area, and this is quite significant because with the assistance of the Ichimoku cloud, we have actually dropped through the cloud, which means the bias is slightly on the downside. However, I'm noticing a slight bullish divergence here, as you can see, to the upside. So this could propel prices a little bit higher. And if it does so, then I'm looking at another test towards the Ichimoku cloud area. Like, we are hovering just below the cloud. So I'm looking at another test probably in the next few trading sessions to push higher, at least with the good earnings earnings report that we've seen in the last 24 hours. On the 4-hour chart, we are looking again slightly biased to the downside. However, as I said, if we see this slight bullish divergence come into play, then we could see another move to the upside here. It's quite a long one on the 4-hour, but if we can get another leg to the upside, this will be quite significant. Another test, and obviously if we don't break this psychological $150 region, then it will be even more prominent for bulls at least. So we'll see if that comes into fruition as well. And just a quick look on Coca-Cola. The last time I looked on Coca-Cola, just bring it out to a daily chart, I was looking at this grand ascension that we saw, but then we dropped out of this upward channel, as you can see here, roughly at the middle part of August, roughly over a month now. And as you can see, bias is now on the downside. However, their earnings season is yet to come. We'll see if they can pick up some good momentum to the upside, and that will give us a bit more impetus there. If not, then I expect another leg lower, and then we'll probably be seeing these recent troughs here. We've passed this one here, but more significantly, $50 is quite a heavy support. If we break that, then that could fall even lower. And just looking on the 4-hour as well, just remove these drawings. So as I say, fell out of the ascending channel, but we can probably forget about that now because it was a few sessions ago. Now we're having a bit of a move to the downside, as you can see, trading very far away from the Ichimoku cloud. So this is quite a big step in the weight of the time that is going to go in for probably roughly about $50. So we'll see if that comes into fruition as well, and we'll see what the opportunities are in the short term. So earnings season is upon us. Don't forget to check out the earnings season calendar. It can be found anywhere on the internet, so that you're not surprised by any big moves in the markets. We'll see what the opportunities are as we head into the fourth quarter. So that's all from the Stock Watch today. As usual, we'll speak tomorrow. Any posts that you want to put, please feel free to do so, and bye for now.